Alrighty, folks. Today is the 13th, Friday the 13th. Happy Friday. And welcome to the live stream, of course, all over the world. Germany, Thailand, Japan, everybody. Thank you so much for joining. And we begin the live stream here with a reminder that you can post your comments on YouTube or on Patreon or in Discord. We'll catch all of them before the end of this session. Now, if you can hear me fine, you can see the picture fine. I'm looking at the 5 minutes chart of the S&P 500, the SPY. Just give me a little bit of a feedback in the comment section on YouTube, and I'm going to begin right away. Okay, thank you so much, everybody. Let's begin right here. Obviously, you know what happened yesterday, and we have a flare-up here in the market that, it is kind of moving the market in what was needed. You're kind of giving the sellers a reason to sell here in the S&P 500. We're still above all of the moving averages that are important, but it is giving the reason for that sell. And then if you're going to combine it with more weakness in the macro, for example, and more news, it could begin that process. Could be the spark that begins the process of the correction. But one step at a time here, folks. Let's look at the SPY. We went down all the way here, the lows, 596-ish. We're coming back up a little bit. So let's look at the zero DTEs, because that's going to have an impact right now. Of course, the market is going to be wired to the algos and listening to the news. What's important is, of course, what will the Iranian response look like? If it is a mediocre response, they're going to shoot a bunch of rockets in the desert. Then we'll know that, okay, Iran ate the shot and they're not going to retaliate much after that. And that's going to be the relief for the market. Oil will go down, futures will go back up, that kind of thing. But again, anybody watching the situation thinks it's going to be a serious retaliation. Then after that comes another series of bombing. So it's going to keep going here. And I think that we're going to see a lot of investors hedging before the weekend because of that uncertainty. But zero DTEs will have an impact today. So let's look at these right here. Today's the 13th, really interesting. Biggest contract, see, they closed at 600, but they bought above. So even though it has the highest volume, the market maker doesn't see it as a threat, and they closed. You guys remember the last few days we did the stream. The OI change for the calls was always positive. Today it's negative. They're closing the calls. The open puts. Again, things leak ahead of time, folks, in the market, and they make moves. And they scored the 200, the 300% worth of gains that you see right here in the puts. If you think that anything that happens in the world is not leaking ahead of time, think again, because they're positioning in the market to benefit from that. What we see right now is the OI change, and the open interest is heavily in the favor of the puts, something we haven't seen in a long time, for a few weeks. We went through the big contracts where we see the volume coming up today. Little bit of a gap here at 596, but 595 is the floor. So we go back to the SPY. We went down all the way to 596.65. I think right now, of course, the market maker is going to try to scare some of the puts to say, hey, don't be too greedy, book some of these profits that you got right here. And that's what they're trying to do, perhaps by a little bit of a rebound. But absent of buying the 600 calls aggressively, which has the highest volume right now, but they need to add a little bit more. They need to go 150 above 200 to compensate for the loss of the open interest overnight. If they do that, sure, we might rebound. But my 2 cents would say that we're probably going to go back and revisit that 595 level in the SPY and then see what's going to happen. So right now, 2 cents, I think we still have more downside to come, absent of heavy buying of that 600 zero DT calls. If we look at the VIX, really important. So this is the VXX, which I like to track when I'm doing trading in the morning. But the VIX 20, that's going to be the most important number. If we close above 20, you have a breakout in the VIX. Like I said, my reading of this geopolitical situation, it ain't going to be the garden variety one. I think this is going to escalate in a big way. So we'll probably see the VIX heading higher. Close above 20 is going to seal the deal. If the market feels that the VIX is going to close above 20, market meaning a lot of the players in the market, the investors, the traders, they're going to begin to hedge even more before the close. So watch this 20. If we keep holding above it, you're probably going to see a move higher in the VIX by the end of the session as folks begin to hedge over the weekend. Looking at some of the big names, NVIDIA, that's what drives the market, of course. It is breaking out of its rising wedge pattern, as you can see right here. So yesterday we talked about 145 being a ceiling. We see that right now we stopped once, twice at the end of the day. We lost 143, which was the most important number in yesterday's mechanics. What I see right now is probably NVIDIA coming back down, forming sort of an inverse ABC. So there's worthy to look at NVIDIA's zero DTEs and see what they look like. Again, closing of the calls. Not a coincidence, folks. Opening of the puts. They know what's going on here. And I think that NVIDIA, looking at the volume, the calls obviously have bigger volume, bigger open interest, but now we're past below that. So long as we stay below 143, let's look here. Clean this up. 143. So long as we stay below 143, that means that the puts will gain advantage and they can push it all the way down to 140 if they want. If they continue to add to that volume, they could push it down to 140. But NVIDIA has this big number, of course, and I think that the market maker's approach will be, you know what? Let me take advantage of the tape that is going down already to make sure that I remove the obligation from all of these puts, because you have 70,000, all of these big contracts. So market maker wants to avoid any obligation there. By the way, if you hear any snoring or snorting, that's from my dogs. They're with me today, Friday, but I think that the market maker probably going to push NVIDIA to the downside. Maybe we'll see that 140 today. As far as Apple, flirting with the loss of 196.5, and if it does, I think that we're going to have to revisit the lows here, so it's going to be 193-ish, 193.5. After that, we can talk about lower targets, which we haven't seen, by the way, since April. So, notice that Apple did not really recover along with the market after Liberation Day. It is trading pretty much close to where Liberation Day flush out was. So I think Apple was the weak, and if there is weakness in the market to come, it's going to be led by Apple. Usually the weak is the one who leads. If we look at other names really quickly here, any impact that we see in the big caps, Amazon not moving much. Microsoft, we know it's the most bullish one, so it is beginning to correct a little bit here, losing some momentum. I think we might close the gap from yesterday, so we might go to 473 here in Microsoft. And if we do, we'll see how that's going to hold. If we close below, then okay, we have a break in the bullish trend. But so long as we trade above 473, it's just a pullback to close the gap. Looking at Meta, I'm not seeing anything significant here in Meta. Even if I zoom into the 3 minutes, the 5 minutes, not seeing anything significant. If I look at Google here, everything is slow today. Here we go. Google not doing much, so I don't think Google here is worthy of keeping an eye on. It's really the VIX and what's happening in the oil market. So oil right now, if we look at the hourly chart, it is still holding at above 70. And if you look at the daily chart, we talked about the resistance to the bands and the resistance that we have here around the previous highs. So we surpassed one high. This is one that was already beaten. So that's done. Now we have to beat this one in crude oil. I think any news of an Iranian strike on Israel, you're going to see oil going back up, challenging this resistance and beating above it. So, and if that happens, by the way, the algorithms right now are wired to look at light crude oil and then move the VIX accordingly as they see light crude. Some of the other assets benefiting today, of course, GDX. We got the 50-55. We'll keep it as it is. If you want to add a little bit more to your GDX exposure, you probably want to go with the 55-60. You don't want to go outside of the money just in case of a pullback. I think we have a breakout coming in GDX. As you can see, really strong momentum. And if we close above the highest wick of last week's candle, 54.62, I think we're going to go back to at least 58. So I'm thinking going with the 55.60 for July's expiration in the GDX. Defense contractors, look at the drop in Lockheed. That's already gone now. Lockheed is up about 3.5 today. Raytheon, all of them. Harris is also up today. So all of the defense contractors will continue to gather more steam as we continue to see the development. Raytheon is a little overbought. So you'll see more concentration in buying Lockheed, the oversold one. But it doesn't matter which one you pick. They're all going to move higher because, I mean, look, they're going to retaliate in a big way. There's absolutely no way about it. They're going to retaliate in a big way, and then Israel has a plan against that retaliation, which is escalating even more. So it's going to get really ugly in the next few hours over the weekend. We got to look at some assets, fertilizers. I made a tweet about this. The fertilizers, Iran, of course, big producer of fertilizers. So any fear of shortage, Mosaic now moving higher, probably going to close the gap, trade above the highs again. You have Nutrin is another one. You have, I believe, let's see. We have CF, not CE, CF Industries. Same thing, that's leading the way, about 5%. So I'd rather go with Mosaic or Nutrin, to be honest with you, but even CF is pretty good. Anything in fertilizers is going to begin to do pretty good. I don't know about FMC, though. FMC, no. FMC, that's the pesticide, so that's not participating. But anything fertilizer is will participate in a big way because my 2 cents, Iran retaliates, and then Israel begins to strike the economic side of what's financing the Iranian regime, which is going to be the ports and the oil facilities. And that's when the game begins to change vis-a-vis the stock market. So keep an eye here, folks. But before we take your questions and your comments, let's check on the stream, see if it's actually working. Okay, it says the stream is healthy. So if you got any problem, just put them in the comment. We'll catch them right away. But looking at the movers, Visa down. That's kind of interesting. The Visa's down with no earnings, with no nothing. So this is kind of peculiar. Why do we see Visa down that much? It's retailers exploring their own stable coins. I don't know if that's really significant. Maybe it smells that maybe a dip there you want to trade at least here. Go with the 350 calls. I don't think that's going to be a threat to Visa, to be honest with you. The consumer is still going to continue to swipe those credit cards up and down. But all of them, see, all of the financials, PayPal got killed too, so the rest in peace to the call options I got. MasterCard, same thing. The airliners, obviously, even Delta, I think it's down. The casinos, I have a segment about the Las Vegas indicator, and a lot of the strip casinos with no exposure to the affluent consumer will get killed. So we see Wynn, we see MGM, and we'll talk about that probably tonight. They'll give you a bonus video tonight because I already made this segment. Might as well just put it out. But you see even AXP going down because of that stable coin threat, which again, not sure. I mean, Visa, that looks to me that should be trading the dip here. Anyways, let's see a lot of losers today. Look at this. A lot of Baba's down, Etsy's down, Qualcomm getting killed today. So let's look at Qualcomm since we brought it up earlier in the week. Can we do a trade here on Qualcomm in the puts? I'm thinking 155, 150 for now. If you want to go for about 2 weeks, you can go 150, 140. You have to stay closer to the money right now because if things begin to flip, you can get out of it quickly. If you go out of the money, there's really difficult way of getting out of it. And right now, it's not confirmed so long as we have a trade above 155 still. Taiwan, like I said, the implied volatility is down, so Taiwan could be another pick today. Didn't pick it up yesterday, but I might pick it up today. So we'll keep an eye on these names. We'll do a concluding brief before the close this week, which we haven't done last week. Anyways, you see the biggest movers here, a lot of energy stuff. ADM, really interesting. I don't trust it though. It has the inverse on his shoulder. Let me show you here. Has the inverse on his shoulder. Maybe you can see it better in the daily. Gotta close above 52.22 though. And the company has a lot of fraud, so gotta be careful with it. NRC, Lockheed, those are going to be hot. Any defense, even Palantir, just because of its association of defense. KTOS, any defense is just going to heat up right now. But the other thing, folks, is energy stocks. If energy begins to trade above 70, stay above 70, and if it passes 75, a lot of the valuations right now that you see in energy stocks like Exxon and the rest of them make them really undervalued right now. So they have at least 10 to 15% to make up to be fairly valued based on a 75% plus price in crude. So keep an eye on these energy stocks. I think that by the end of the session, maybe it's going to be worthwhile to pick some of them as a stock in the portfolio just to ride some of this wave. But again, not a lot of gainers besides the IPO stuff and the energy and some of the defense contractors. So that's the theme, but the rest of the market is down. Let's go back here to the SPY and take your questions and your comments. Keep it at the 5 minutes chart. 600, we're probably going to see increase of 600 calls volume. That's what they're trying to accommodate right now and scare some of the puts and then take it down again. Okay, I averaged heavy yesterday on NVIDIA, 135 puts. Really don't want to sell, so you did pretty good, but you're still not going to be enough. 135 is still going to have a lower odd of working out next week, so if you're up a little bit, if you made some money, I would suggest that let's see how this is going to work out. If there's another leg down, I would say take the opportunity and rolling that trade for another week. Just give it another week and open a spread at that point, because if the volatility increases by the end of the day, it is in your advantage to open either the 140 or the 135. So you can do 140, 135, or 135, 130, whichever one you pick. But go June 27th. That's what I would do here to give the trade a little bit of a chance of working out. Because 135 for next week might, but still a long shot right now. Okay, what do you think of LM? I mean, you got it at 45, right? So now we're trading at what, 75, 85, right? So you're still profitable here. So something you know think about before the end of the session. Mike, what do you think of LMT calls? July 18, 500 calls, and then September 19, 465. Where do you see LMT going? Mike, are these the calls that we talked about before that we're kind of losing a couple of days ago? Because I don't want you to open a new position in Lockheed, to be honest with you. I think it's a stacked position if you want to buy it. As far as options, not sure. But if you kept the options that we talked about, if I recall correctly, if we talked about it a couple of days ago, you got the July 500. Now that's really close to being a possibility. You got a full recovery right now, which, looking back at it, maybe was an opportunity to add, not get out of it. It sounds to me that you kept it, so good for you. I think you'll make it down to 500 with the geopolitical flare-up. You'll see more bids in the 500. So up to you if you want to. If you get the 500, you want to book that and just rely on the 465. I would say the 465 is deep in the money. So I would utilize the 465 to sell diagonal spreads, for example, at the 500. So I would book profits from the 500 calls in July 18, maybe if not today, next week. And then maybe sell the 500 diagonal on the 465 and just keep that position. Maybe at the end of the day, you want to enter a Lockheed Martin position by September at 465. If it's trading back at 600 or 700, you probably want to buy it. Okay. I have the NQ puts 21.5, down 60 for next week. Next week is going to be tough, but not impossible. 21.5 is not impossible. You have 21,000 July 31. So see, you were down 50 right now. You're down 37. So it was probably an opportunity to average down on the weakness of the contract. So you have a break right now. Let's see how this tape is going to work out. If we close down, let's say the lows of the day, which I think we'll see more hedging before the end, you probably want to double down on these because you still can get a better price on it and lower your average and turn the trade to be profitable by July. We have plenty of time. The July I'm not worried about. Next week, that's a tough one. It could happen. Not saying it's not going to happen, but it is a tough one. I'm looking at some energy stocks here. Let's see. We'll keep it at the GDX because that's important to watch. Okay, you have NVIDIA, 135, same answer. Leo, same answer. So you want to take the advantage today of probably rolling to the 27th. And I think if you roll to the 140, 135, it ain't going to cost too much. It'll be just a little bit added exposure, but it has a better probability of working out and still going to give you a big profit. So if not, you can go 135, 130. Because if you look at the daily chart, sure, any acceleration of the selling, we've seen it before. We can be back to 135 really fast within a few days. But when you give it 1 week for that move to happen, it's a little too hard right now. Let's give it 2 weeks. Okay, you mentioned from the indices, Qs can be hit the hardest. Why would tech have the biggest impact? It's just because of the indices, the biggest weight in the indices. When folks begin to hedge or sell, they're going to sell the big caps by default. Okay, you have the Tesla June 20, 300, 290 puts. Not sure if I should roll or just close. Tesla 317, showing a little bit of relative strength here, holding pretty good, but I mean, the robotaxi event will keep it afloat, but I would say right now you still got a shot. You have the 300, 290 for June 20. I would not roll, to be honest with you, because that's going to be an extra cost that is going to be significant for a stock like Tesla, where the premium is really high, and there's no guarantee that it's going to play out. So if we close, for example, below the gap right here, which is, if we get a reading on it right here, the open or the close was 308.66. If we close below, and I would say just 310. If we close below 310, yeah, you got a big chance it's worth rolling. But right now, I think the best thing you can do, if you want to take the loss because the money is good and you can use it for any other trade, that's up to you. Or you keep it as a wild card. Maybe it's going to work out. Maybe we'll see bad news about Tesla next week. It will be at 300 really fast. But right now, the stock is showing me relative strength. And I think that robotaxi event is going to keep it afloat a little bit. So if this was my trade, be honest with you, I'll close it and wait in the sidelines. We go below 310, put it back on the table. And you probably want to go for a longer expiration date, 27th or the first week of July. Hey, Mav, do you see the oil stock dip worth buying now? In certain names, yes, because if crude oil stays above 70, we don't even need to go to 75. If there's an Iranian strike, and that's going to happen, it's just a matter of time, we're going to go above 75. So you will see crude oil or energy stocks moving higher. So I would say whatever you have, if you have Exxon, for example, maybe you want to pick up more shares of that. If you have Kinder Morgan or if you have Oxy, maybe you want to pick up a little bit more on those shares. That would be my approach. Right now, I have a lot of exposure in USO. I have a lot of exposure in ExxonMobil, so I'll keep it that way. I'm just going to add a little bit more in Exxon and Kinder Morgan. And then I have crude oil contracts, which these have to be closed because the futures can be more volatile than the stocks. So I want to concentrate a little bit more on the stocks, close the futures, and keep USO open. That's the strategy for now. Neil, you're thinking about buying the oil futures. You could, because look, when the Iranian strike happens, we will see an immediate flare up in the price of oil because now the market is going to read it as, okay, we have escalation. But I'd rather that you go with either USO or any of the energy stocks because they're going to catch a bid too if oil futures go higher. But the problem is, what if there is something that happens over the weekend, a diplomatic effort? I'm just putting a possibility out there. I don't think it's going to happen, but it's a possibility. You could see the futures reacting right away fast to the downside. So I would say before the close, maybe it is worth it to grab some crude oil futures, but not during the session right now. Okay, David, obviously airliners don't like higher oil prices, but they can still withstand 70 to 80. Thoughts on getting early in AAL, American Airlines, the 12 calls at 40. So it could be an opportunity right now in the airliners, the drops that we're seeing. Of course, there's a little bit of pessimism from the Air India crash. Don't forget about that. And you have also the situation in Israel and Middle East and all of that. So it ain't just the oil prices. Be honest with you, I think that the airliners are reversing. These are big bearish engulfing candles. On weekly topping in his shoulder. You can see it all over the place, by the way. You can see it in not just in American Airlines, but you can see it in Delta. You can see it in United. So I would say hold your horses a little bit here in going with the airlines. If there's a dip that I would pick right now, like I said, probably want to pick up the Visa dip. It's already at 350 right now. Maybe you want to pick up the AXP dip if you'd like. But I would not pick up the airlines. Okay, thoughts on Roblox puts. Roblox been really strong, Neil, so I don't think that we should be speculating here because uh, with the stock going higher like this, if I check out Roblox puts, and let's say we're just picking up timing a pullback opportunity, it'll probably go with the 95. Implied volatility is about 40. So that's the only trade that I would go with because there is no point of going longer than that and paying more. Either the pullback happens next week or not because the name stalled already in the daily chart. Momentum is about to reverse. So either it happens by next week or it doesn't. So this is the only trade that I would do. 95, and then if we're going to sell the 90, I don't think it's going to give you a lot. Yeah, it's not worth it. I'll just do the 95 here naked, see how it works out. Maybe you're lucky, timing is going to be precise, and trade is going to work out. But no need to go for longer here in timing a pullback in Roblox. Okay, Mav, can you review the management of next Friday's 75 calls USO, also EWG and DB puts? Okay, so let's look at USO. We're now above 75, so up to you if you want to sell the 80, for example. If you want to sell the 80 and capture some of that premium, if you think that we have another move up, but even if you go another move up, the only thing you're going to capture is the $5 between 75 and 80. So another approach could be book your profits right now, wait till the end of the session, then place the bet right back again. And if we go down, let's say the 78, 77-ish, that'd be ideal. There's no guarantee we could just roll back up again. So for me, since I have crude oil futures exposure, I'm just going to sell those, book those profit, and keep USO open for next week. Since we're deep in the money, I'm not worried about it. I'm just going to probably open spreads on it if it continues to go higher. Now, as far as EWG and DB, we're down today a little bit, closer to 40, so we'll keep the EWG, but I'd rather go to July, to be honest with you, just to include the deadline for the negotiations. And you see here, DB is down about 2.5, so they're moving in the right direction, but I think we're going to need a little bit more time. I'll give you an update before the end of the session. In my concluding note, if I see that it's worthy to roll to, let's say, July's expiration at this point, I'll do it. After this drop right here, I'll probably do it. So we'll talk about it before the end of the session. Okay, SPY, we go back to SPY 5 minutes, accommodating the 600, that's my guess. 600 calls right now for market maker, and then after that, because there's no volume showing up above 600, they probably drop it down again. Farmer, how do these geopolitical actions play into metals, specifically platinum? They play pretty good, but right now the initial reaction without U.S. involvement is the dollar going up a tick. So see, look, platinum was already overbought to begin with. So this is a pullback. I would say Monday. Monday will probably be a good buy the dip opportunity in platinum. But right now, with the formation of the market going defensive, it caught a bit, the dollar, and you see gold also catching a bit. So right now, as I said yesterday, and said for 2 days in a row now, I've been saying that we're going to see rotations out of silver, out of platinum, back into gold as a defensive. Gold makes all-time highs. Then folks begin to book profits and rotate back to platinum, copper, especially after these dips that you're seeing right here. Okay, let's check out on the zero DTEs, folks, see what the market maker is thinking right now. The SPY, and yeah, they're probably trying to accommodate those 600 calls in as they begin to close, because they probably got some money left here. Yeah, I mean, 75 cents better than 40 a few minutes ago. So they're probably going to begin to book, and then we're probably going to see more additions to these puts, and the market maker will probably try to drop it down and accommodate. After 97, we lose 97, probably going to be 95. That's my guess of what's happening right now. Jeff, morning, Mav. USAR was going nuts. All-time highs and now consolidating. I'm seeing a break over 16 next week. Any thoughts? Appreciate it. USAR, to me, it's a keep. I think it's going to reach that resistance. It's just facing those Bollinger Bands, so it's having a hard time to break. But I think that we have a lot of demand. We're not the only ones looking at it, so I think we're going to be back at 16. I agree with you. At least we're going to retouch 16 because of this resistance line that we see right here. So a little bit of consolidation, then a pop. We'll be back to 16. At that point, we're going to notice the reaction. Maybe it's going to be really overbought and the hour sign is worthy of exiting at that point. But right now, I think it's a little premature to exit and give up on this trade right here. It's working out fine. Let's keep it as it is. We're looking at the SPY again, C600, and now we're beginning to see a little bit of weakness. Mav, I gotta admit, I'm surprised the GDX is not above 55 right now. It could. Listen, we got just one part of what happened. This is gonna get a. I think it's gonna go to an escalation route at this point. Because at the end of the day, if you're Iran, if you're gonna go down, might as well just go down swinging, and there was a good chance they could go down. I think they're going to retaliate in a big way. There's no point of them just saying, hey, we're going to shoot a bunch of rockets in the desert and call it night. So you'll see immediately more and more flows as we hit to the end of the session, by the way. You'll see more and more hedging, more demand for the VIX showing up. And between crude oil and gold, there are some traders who love to hedge against geopolitics. They say crude is a little bit volatile. Crude has another negative catalyst, which is OPEC increasing the supply and the weakness in the global economy. So I'd rather go with gold. A lot of investors are thinking that way. So I think that we will see the GDX above 55 and then some. I think that we're going to see a breakout all the way perhaps to 60. So that's why I'm saying if you have the 50-55, keep it as it is, but maybe you want to open a new trade somewhere in today's session, opening the 55 and then selling the 60. And I might do that before the end of the session here, folks. So keep an eye. Any dips I see in the GDX, we're probably going to pick it up because gold is just the most reliable hedge against everything. Hey Mav, thanks for the support. I have two different questions. Yesterday you talked about the algos, so I wanted to ask about the main market maker. Who are they? The companies that are selling the options, that are doing the trading desks. So JP Morgan is a big one. Goldman Sachs is a big one. Citadel are obviously one of the biggest ones. So these big firms are the market makers. They're the ones writing the options. They're the one trading the futures. So they have huge control over what happens in the market. Second, do you use any additional spreadsheets for your trades? Yes, to a certain extent. But I mean, after years of doing it, it's kind of in my head. I don't open a lot of trades. I don't open, let's say, over 8 trades at a time because I know over 8, I'm just not going to be able to mentally manage all of them. But yeah, I do keep a spreadsheet just to track what I'm doing and maybe reflect on some mistakes or what I should do differently, that kind of thing. It's helpful for any trader or investor just to keep track, to write down your own trades, where you entered, and you write the thesis really quickly in a few sentences, why you entered the trade, and at the end of the day, mark it as a win or a loss. Why was it a win? Why was it a loss? And I think doing that practice over time makes you a better trader. Ronald, up on UCO and USO next week, calls reluctant to close and roll, but probably should. I would say book the UCO, because that's the high volatility one, and keep USO. USO has higher volume, so right now, maybe you'll be able to close at UCO at a better price because you got a lot of volume. But maybe next week, you're not going to have that volume. So close USO, close UCO and keep USO. Small, with my 80% commodity-related portfolio, I'm happy. Add Carvana breaks and up after down 20%. When to close and de-risk. Time is not an issue. So Carvana, tough one. Look, Carvana is a tough one because it's still a huge short position from a while back. So you see a lot of short covering. Right now, look, I want to look at the weekly because timing is not an issue for you. Big bearish engulfing candle. We have a problem with used cars. The economy is getting weaker. A lot of auto loan delinquencies. So nothing of this makes any sense at all. And I think the Carvana should be back below 100. But you have to be really, really patient. If you short right now and you're back on track, maybe you want to complement some of these drops that you got in your short position via puts, just to increase, give it a booster on these drops, or hedge using short-term calls. But right now, if you have a short, let's say you entered 270 or above, I'll keep that short because in time, this thing is going down. It's just, there's no way it's going to hold. And a lot of folks said, oh, this is going to be the future of buying cars back here. And you just crashed down in the most epic way. I think it's going to do it again. It's just going to be a tough one. Not an easy short. Closer to 600 now. Okay, the problem is running cash account on Robinhood. They won't let me roll either. Well, you can roll manually, right? You can close the trade and open a new one. That's pretty much what a roll is. So if they don't allow you to roll, you can just close the trade and open it again. Open whatever strikes you'd like, whatever expiration dates. So roll doesn't mean that just an option that you see in your broker. It's actually closing and opening a new trade. You can do that manually. Okay, hey man, with everything going on, what sector is worth opening a new position in today? I think energy, just because the increase in crude oil here, it's going to increase the valuation of these guys because they went down aggressively because of all the recession fears, and now they're undervalued. So I think this is why I added VLO, even though VLO is going to struggle a little bit because it's a refiner, and when crude oil prices go higher, that's an added cost to them. But VLO, if you want to add Mosaic, look, I think it gave you the dip that I don't think we're going to get a bigger dip than this. So maybe we want to capture it right here. You also have any of the other energy plays, whether you want to go with KMI, Exxon, Chevron today was doing pretty good, maybe pulling back a little bit here. So I think energy is really, really undervalued. And I think that the economy can still hold through the summer. I don't think we see a recession by the summer. I think we can still hold because of a lot of excess savings and plans that already took place and the affluent consumer or whatnot. So I think that you definitely want to think about energy today. We'll keep it at crude oil here because it is see, when crude oil moves higher, the VIX is going to respond right away because it is wired to respond to what's going on in crude. Okay, I'm looking at IWM puts. What are your thoughts? Maybe a little too late for those, right? You already got a steep drop a couple of days ago. If you go to the daily or the weekly chart, sure, you got all the way to the 50 perhaps. Let's see where the 20 is. The 20, okay, so we have all the way to the lower Bollinger Bands. That'd be about 200. So you can do the naked 205 2 weeks from now. You can do the 200 for July's expiration. You can do the 210 200 for July's expiration, which will be my choice. But notice that in the shorter term charts, it got a little oversold here. In the 5 minutes, for example, a little bit oversold. Even in the hourly, a little bit oversold. So here's what we want to look at in the IWM. Since it is oversold, we have somewhat off, let's call it a head and shoulder here. So breaking the lows of today, that's going to be a confirmation that we're breaking the neckline. And indeed, we're probably going to revisit the gap right here in or around 200. So at that point, let's see how the tape is going to work out. By the end of the day, for a week, we begin to head down again, breaching the lows. I would say go with the IWM and go with the 205 200 because the 210 probably going to be too expensive at that time. So 205 200 and go at least 2 weeks from now. So not July 20, go to the next expiration date. And that should be the trade for now. 205 200 if we price it in right now as we speak. IWM. And we go to the 27th. Go with the 205. That's going to require another 3%, so it's a little bit steep. And then you sell the 200. That's going to give you an entry of less than $1 right now with a 23% chance of profit. If you want to increase it, you have to go close to the money, which will cost you a little bit more. So if we have a sell-off event correction, I think the 205 is reasonable within 2 weeks. So this is the trade that I'd open initially and then work in expanding it if it does work out. But just give it a little bit of time, because right now the market, you got to see a little bit of options expiration dynamics. You're going to see a little bit of day trading dynamics where folks want to buy the dip, trade it quickly, and book profits and that whatnot. So you want to wait till you get closer to the end of the session before you do these kind of moves on the index. Okay, open NVIDIA 120 puts for August 15. No strangle. Can you look at the VIX? Okay, well, NVIDIA 120 is kind of aggressive, okay, for August 15th. I'm not saying it's not going to happen, but it's a little aggressive. It's going to require really, really bad news out of China and trade. Can you look at the VIX? So the VIX, I think, again, if you look at the VXX, I think the VIX will be closing above 20. It doesn't make sense at all to sell the VIX like this. You'll find demand coming up right away. So we'll close above 20, and that's going to be because crude probably going to surge. You got to understand that Israel is continuing to strike Iran. Okay, so it wasn't just one hit overnight, and they're done with it. They continue, as we speak, they're continuing to strike. So there is an Iranian response coming soon, and after that, there's more escalation. So I'm not worried about the VIX not closing above 20 today. I think it will. Hey Mav, is it too early to buy the dip in the EWY? I'm thinking 64 is a better entry point. Letting it fill one of the gaps below. Thoughts, please. EWY, let's go back here to the SPY tab. Korean ETF went down a little bit, so we got to be careful because international markets right now are weakening. You saw what happened with the EWJ. It's a little too toppy here, Tanner. I would not do it. I mean, the entry was maybe around here, under 60. But right now, the entry is just not good. You have a weekly candle that's outside of the upper Bollinger Bands, and it looks like a topping candle right now. No, I'll wait a little bit more. Maybe there's something in the Korean ETF, and I think there is. But we have to wait a little more. If you haven't entered before, you got to wait. Not a good time to enter. Okay, look, senior, you got the 120 for NVIDIA. That position will be, if you don't get major moves in NVIDIA quickly, you're probably going to see that position decaying fast at the 120 because you're pretty much betting on a decline here back closer to the Liberation Day fiasco. So you need to see trade. NVIDIA depends on trade news. So you need to see a trade flare up with China. So 120 is a little bit of a far shot. I would say for me, a better trade will probably be the 140, 135 or 140, 130 put spreads. Those are going to be more realistic than the 120. Because if you go down, let's say you go down 125 by August, you're still going to lose money. If you're not deep in the money, you're not going to lose, you're not going to make money from it. So I'd rather go with realistic spreads that are going to work out by the time frame. Okay, PLTR. Now this garbage is acting like defense stock. I got you. Look, I got you. It's way it's way overvalued. I mean, it's more valued than Lockheed Martin now. It's more valued than Northrop. So it is ridiculous, but it is acting as a defense contractor. It's catching a bid. So it has a few things going on. Really high volume because of the options activities. Retail is still buying this name. They keep, bear in mind, a lot of the influencers that you see in YouTube, by the way, they're not going to tell you that, but they're getting paid by Palantir. So any YouTuber comes out, says positive things about Palantir, they're getting paid. And this is part of Palantir's strategy because they know that their growth has to come in the backs of retail investors. So that's why they're doing advertisements all over the place, paying influencers all over the place. So you have retail, you have options, and now you have also the treatment of a defense contractor that's making it really tough to work out. CoreWeave, I think that's more going to act closer to NVIDIA. If NVIDIA goes down, it's going to go down. If it goes up, it's going to go up. So if next week you think that NVIDIA is going to break, probably CoreWeave is going to break too. Really heavily dependent on NVIDIA's trade. We'll keep it a Palantir here and go back to the SPY. Hey, Mav, I have the 70 puts expiration date for TTD today. Is it worth keeping the shares at this point? About our favorite stock, MOS. When will it be a good time to add? I think that the time to add is right now because we already got the dip. I don't think we get more of that. I mean, it just keeps going, right? So cash while it still can because you have nat gas moving up. You have worries about shortages in fertilizers. All of these are good news for Mosaic. So it's probably going to close the gap and trade back at the highs again now that it has plenty of room to do that. So I think the time is now. If you think that you missed it, maybe NTR is something you want to consider. CF, as we just talked about, some folks will go with ISL. Not sure if that's participating today. Not really. So CF is another option. Not really that overboard on the weekly if you look at it. Still got a little bit of room to revisit the highs. So consider one of these. I think all of them are okay right now to enter because of the geopolitical flare-up. That's going to be a tailwind for them. Now, as far as Trade Desk, let's look at this guy right here. Trade Desk. You have the 70 puts expiration date today. So what that's going to give you is right now you're in the money. So if you entered TTD at $70 a share, today you can exit by exercising these puts. You can exit and at 70 with little harm done. Otherwise, you can book the profits and use that as a hedge, whatever profit that you got. But it looks to me that we're stalling here a little bit, forming a bear flag. See a bear flag coming back down. I think we close below 70 today. There is a high degree of risk that we could be closing the gap right here. So from my perspective, I would exercise the puts, sell my shares at 70, and then wait and see. I'm not giving up on Trade Desk that it could move higher because in the weekly, it's still got a lot of potential to move higher. Consolidation and then moving higher again. But to reduce the risk, just in case if there's a risk-off rotation, I want to exit right now. If we appear to close below 70, we'll do that. And then wait in the sidelines. If it begins to move higher again, then we'll re-enter. Maybe at a higher price, but at that point, we have a confirmation that it is breaking out, that it is releasing the energy. It wouldn't matter much because you might miss on 2-3%, but that's not going to be a big deal. So I think that's a safer way to deal with Trade Desk. Going back to the SPY, we're at 600 right now. Okay, I guess ELF is a safety stock now. It's not really a safety. It's just the retail investors. I mean, they're gonna get killed at some point, and it will be well deserved, by the way. But right now, that's what they do. They're just stampeding and buying these stocks every day. And they're probably doing a lot of dip buying today because the news doesn't matter because stocks always go up. You know the deal. So they're stampeding. Any volatility, increase in volatility and close above 20 in the VIX today means that we're going to enter a correction phase. And a lot of these assets will get hit. Because remember, a lot of them are levered. They're using a lot of margin, the retail investors. And if one asset goes down, as we've seen with Tesla, it kind of flushes all of them together. And yesterday, we've seen a little bit of that from the GameStop crowd when it went down 20%. But if you see one of these names like Tesla, Palantir, or Carvana going down big, you'll see them selling the other stocks that they own just by default. So we'll try again on that. We'll try again. But right now, we'll leave these retail plays for later. Maybe Carvana if you want to be adventurous, but I would even leave that alone. Hey, Mav. Thoughts on Bitcoin? I have the puts since 110,000. Well, that's a little concerning that you have a put in 110,000. Well, it's not concerning. You're actually in the money. So we have the 110,000, and now what do you do with the Bitcoin? Look, it is rebounding along with the market because we see a little bit of trading activities going on right now. But to my knowledge, I think that we closed below 104, and I think that we have more declines to come in Bitcoin. So if you have the 110, you entered really good at a really good timing, keep it as it is. I'll keep it. Now, if you want to de-risk, you can use an ETF, but it looks like you want to trade BTC, so I'm going to keep it right now because I think that we have a risk-off rotation, which Bitcoin is not going to participate pretty good in it. Right now, it's just trading activities. You see, retail investors just continue to buy the dip here. But once you see a risk-off rotation, Bitcoin is not going to participate like gold. Okay, let's do USO. Since my broker does not allow trading USO, well, that's kind of weird, right? Because USO is the most reliable one. It's the bigger ETF. What is a good level to take profits? You think it might go back all the way above 30. Okay, let's go UCO. See, the levered ones are more dangerous because when you get pops like this, and then you see a little bit of a pullback in crude oil futures, you could see bigger flush downs. Now, usually, when I'm looking at any chart and I have a gap above the upper Bollinger Bands like this, to me, that's you book the profits right away. That's just the guess right now. Can you book the profits and then de-risk by using something else? Yeah, you could use XLE calls, for example. You can use ExxonMobil calls as an alternative to UCO. But I think that right now, with a look like this, if this was my trade, I would book it. I don't like gaps like this above the upper bands because they're usually corrected. At least that's what the USCO is trying to do right now. Okay, let's do ExxonMobil, 120 calls for June 27. So if we do Exxon, June 27 daily chart. So Exxon is moving higher, just like the rest of energy, but I think it has more reliability in it. If you do the 120, you're going way too far, right? You're betting on big pops here in a short amount of time, which is not realistic, to be honest with you. June 27, we're talking about this. Let me show you. You're talking about a flare-up by about 7-ish%, which if you add the cost of the options, you probably need Exxon to be up 10% in about 2 weeks. And 10%, if we just measure 10% like this, we haven't seen it, right? You don't see it quickly. You see it here, maybe in a couple of weeks it happened. Maybe here, it took a week, a little over a week for it to happen. But after a move like this, it's hard to add another one with no stops. So I don't think that's a good trade. I think either you open a spread at the 110, 120, or 115, 120. That'd be more realistic. Now, if you're betting on a geopolitical flare-up that could rise the price of crude oil, then you're better off doing naked calls in USO. Those are the ones that are going to be the most rewarding. But if you want to do Exxon, no, we're not going to go with the naked 120. We'll do probably 115, 120. Let's see if we have a price for you here. ExxonMobil, if we do the calls, see if you go to the 120, just go to the 120 naked, and you'll notice here that you have a chance of profit of 6.7. Really speculative play, and most likely it's not going to play out. If you go 115, and then you sell the 120, you have a better chance of it working out. You're spending 80 cents to have a little bit of a better chance. Of course, if you go, the longer you go, the better your odds are going to be. Between the 27th and 80 cents and the 18th of 130, I'd go with the 18th, and you still got a nice profit here. You could make 200% worth of gains if it works out. So think about it. Sometimes it's worth investing a little bit more in the trade to have a better shot at it working out. Okay, let's go back to the SPY. I got 601 here. Hey, Mav, any plays better than to expect University of Michigan sentiment report, which was a little bit better than expectations? XRT, TGX. Look, the consumer sentiment can fluctuate all it wants, but at the end of the day, the consumer is still weak. So I don't see an opportunity here in TGX, to be honest with you. I see it a little bit too risky. If you want to play the retail and consumer, I suggest maybe you want to buy the dip in Visa. I mean, look at the progress that we've already done since we talked about it. So maybe you want to buy the dip in Visa. Maybe you want to buy the cruises because that's your affluent consumer, and it has a better chance of recovery than the stores or the XRT. The stores have a lot of problems. I'll show you the earnings. When we do the earnings reviews for the retail stores, they got a lot of problems. So I'd rather go with the cruises. The hotels, to a certain extent, could be also another better play if you want to just bet on the University of Michigan data that sentiment is better, which means that folks are going to take more trips and go on their summer vacations as planned. So you might see the hotels and the cruises doing pretty good. I'd avoid the airlines, though, because of the circumstances that we got. The Middle East, obviously, and then the Air India stuff. So avoid the airlines, stick to the cruises, stick to the credit cards, and maybe the hotels will be a better bet. Okay, I agree. I like the 140 puts. Yeah, do a spread. Folks, don't go way out of the money because it might cost you less and it might work out. But what you're betting on, really, what you're betting on when you go way out of the money, especially for a shorter expiration date, you're betting that you're going to be right about an event that would lead the price to that level, number one. And you're going to be right about the timing. That's going to be precise. Your entry right now is going to be 100% right. And nobody has that ability. Nobody. So in the long run, you might waste 30 cents a piece on multiple trades. All of them end up being losers. But if you just invested from the get-go, let's say $150 or $200 instead, and entered one trade that has a good chance of working out, you're going to do better in the long run than just waiting for that hit, that lotto to hit. We all do lottos, part of the game, but in a serious trade, you probably want to do spreads, you want to do something closer to the money. Mehmet, you say the market looks like it will never die. It doesn't matter what's happening, still keeps pushing higher. No scary about anything could happen. Just push higher and buy the dip. Well, we'll see. We'll see. We have serious concerns right now. A flare up in crude oil, if it sticks, and I think that we're just going to still see more and more of that escalation. That's going to lead to inflation. So it changes a lot of the calculation the market has about the macro picture and how it impacts corporate earnings. So we'll see. Yeah, I mean, we could roll over here and have a correction really fast. Under these kind of events, we could have a correction really fast. To like 575, that could happen really fast within like a few days. So you have your trading dynamics, the retail investors kind of names. And this is why those we're not touching. I'm not going to short Carvana, for example, even though it is going down. Some folks want to short it. That's okay. But just understand that this is a little bit of a dangerous game because the flows are coming one way. The feedback is coming one way in these kind of names. And the seller is not going to show up unless you give them really, really good reasons in these names to sell. They sell at the index. They'll sell at certain names that require selling, but they'll be a little bit more sticky in those retail investor names. Okay, here we have TLT 85, 82 puts for June 20. How would you manage? Cut or roll, double down? So if we look at the TLT, the interesting action is the TLT went down. So yields are going higher. And the market is reading the action right now as no, U.S. bonds are not really defense. U.S. bonds are losing all of the appeal that they got. And if you want real defense, you go with gold miners. You don't go with bonds anymore. That's a really terrifying conclusion, by the way. And I think a lot of folks are not catching up to that. That even in an event like we got yesterday, U.S. bonds, there's no love for them. And with crude oil going higher, that's going to add to the inflation concerns. So for the trade that you got right now, the 85, 82, what I would do is roll it another week. Keep it as it is, 85, 82, but go with the 27th instead of the 20th. That's going to give you a better chance for it to work out. And I think we'll be back below 85 again because we gave the TLT a really good reason to move higher today. It didn't. It just reversed right away. To me, that's a sign of weakness and indicates that we have more downside to come. Okay, any tin foil come through the grapevine? We all love tin. Could be. We have a lot of tin foils going on right now. tinfoil season. We're still in DB June 2027. Keep or roll out to July. Have a $30 value right now. So if we look at DB, we're close to 27. Will we do it by the end of the day? Look, if I see it rolling back down, right? If I see that it's not gonna just go in a straight line all the way to the end of the session. If I see it rolling back down, the seller's showing up again, that's gonna be a good sign for me that the trade is working out, but the time is tight. In that case, it's worthy to move it to the next expiration date. And that's what I'm going to do at the end of the day. But I don't think that I should be rolling or averaging down if we're just going to go in a straight line and reverse and then trade closer to 28. Then there is no chance of it working out. And I'm better off waiting for a better entry. But if we come back down again, yeah, I will do a roll before the end of the session and share it with you in my concluding brief. SPY, 5 minutes. We'll keep it at the index. Hey, I have a plan to hold my USO 75 calls into next week. Next Friday, July 18. You have about 10K worth of profit. It's 75. Would it make sense to hedge with Monday's USO puts? Either that, so you're reading the move's really good here. Either that, you buy the puts in USO for Monday. That's going to be a really good hedge. Or you want to book the 75 calls that you have for next week, next Friday, and leave the July 18 workout. That could be another way to do it. Of course, selling a debit spread, that'll be another option. So I can't give you a definitive answer, but you have options. You can sell some debit spreads and reduce the risk a little bit. You can buy Monday's puts, or you can close one of them, which is next Friday, and then keep July 18th. You have plenty of options. You're in good position right now. Just brainstorm which one is going to be better for you and take that decision. You skipped my question above. In the Fed, I don't see it. I don't see it, so you have to type it again. Sometimes that happens. Yeah, type it again. We'll catch it. Ronald, 10-year keeps moving up, and the VIX approaching 19. Makes no sense. Well, the 10-year yield is moving up. TLT is going down. The VIX, I think it's going to go back to 20 and close above 20 today. You're going to see hedging. Yeah, there's a lot of things going on. And right now, the market is assuming that, okay, Israel is dominating Iran and there's just bombing and that's it. It's going to stay that way. Comes an Iranian response, now we have a bigger flare-up. So that's going to happen. It's inevitable. Mav, stop the market. Just look at the red line, 601. 601 was yesterday's mechanical support / resistance today. So that's why I'm keeping it here. We'll see how it works out. But you always want to check out in the 0 DTEs or the 13th. Big number is 600, but they're not really opening above. Right? So I think the market maker is trying just to screw around with these puts a little bit and then push it back down. Because you have the OI change. That's the biggest risk for the market maker. This is not risk for the market maker. They can just push it a tick down, and then they have no OI change. But here you have a lot of them. So you got to cover. You got to push the tape up, then sell it so you can cover when you sell it at 602 or 601. And then you have to buy it back at 592. You're booking profits. So I think this is what the market maker is doing right now. And the Fed, give us that question. Still waiting for it. Farmer, is opening new USO weekend trade a bad idea due to higher cost? Solid all weekly. You sold all the weekly 73 calls earlier this week. Whoops. Okay, but you still got the 75. Good for you. You're taking profits. Let's wait till the end of the day. If you're going to open new USO, you have to wait till the end of the day before you do that. Hopefully we're not going to see the retaliation happening during the session, but my guess is it's probably going to happen over the weekend. So we want to do a bet right before the close. USD question. What do you think about the Dixie? Keep dripping lower or some kind of a rebound soon? Now remember what I said yesterday. The Dixie and gold not going to trade together for too long. One of them going to give up. And right now it looks to me that gold is moving higher. GDX is moving higher. Dixie beginning to give up. So I think that we're going to see more weakness in the dollar, more selling of the dollar, especially if the U.S. gets involved in this. If it begins to flare up into a regional war, we get involved, we're going to see more selling of the dollar. So I'm betting on more weakness in the dollar, and this is why when you see dips in platinum today, palladium, there are probably going to be opportunities to buy comes Monday. Okay, and the Fed, Mav, assuming the war continues to escalate and with the protests tomorrow, yep, yep, that's a big one. That's what is Walmart doing, by the way? Yeah, Walmart is the one that's doing the protests. So I expect that Trump is going to begin to hit Walmart and push the stock down because of that. So I think that's going to be the impact from the protests tomorrow. But some people expecting domestic terrorism. I don't think so, right? I just think it could be a little bit chaotic here and there, but I think it could be an impact of Walmart specifically. I don't think that's a VIX event. The protests are not VIX event. Now, any flare-up in the geopolitics, you have two options. You have crude oil. That's going to be your best bet, along with gold. You pick whichever one you like. A lot of folks look at gold as more reliable because crude oil has one catalyst, which is geopolitics right now. Crude oil has many more. Has geopolitics, has debt fear, has the deficit fear, it has the central banks buying. So either gold or crude oil will be better than the VIX calls if you're betting on a geopolitical flare-up over the weekend. Okay, let's go back here. Mav, is it a good idea to open Oracle put spread 200 and 190 for July? You got a small position because it is up following the earnings close. If we look at Oracle here, 200, 190, you might be seduced because the chart went way too high, so you want to short it, but I think that's the wrong way to think about it because what's happening right now is more and more short covering, more and more options activities. So the wrong time to open the puts. Right now, probably you want to sell calls, either call credit spreads or naked calls. That's the move. But usually that happens when you have an earnings report and it's better than expectations, or we see short covering, that comes combined with a gamma squeeze. So you give it 3 days before it settles down, and then you want to decide to enter puts or not. Right now, the move with this kind of volatility, if you're a shareholder, you definitely need to raise some cash by selling covered calls. If you want to be a trader, just sell naked calls or call credit spreads. SPY, keep it at the 5. Where does one ask questions for Mav for the live stream? Nova Logic, right here. Right here you can ask a question. We'll catch all of them. You can put it in whatever platform you'd like. We'll catch all of it. Diamond, you say, I would also like to point out this just looks like another one of those same swing dips that we keep getting. I truly think nobody understands the extent of wealth transfers causing asset appreciation. Billionaires cannot spend billions of dollars. It all goes into assets, including stocks. That said, I'm short at the moment, and if we get a serious disruption of oil market, shit's gonna get wild. But even then, remember, underlying trend is okay, I get it. So this is skepticism, but the market is just going to dismiss everything and move higher. You got to understand, what was the sentiment right here before we went down right here, right? So things could happen really, really fast. Right now, sentiment is in a different position because all what you've been seeing is just buying the dips and moving higher based on the hopium of good news. But things could change really quickly. And I think that if you begin to introduce a geopolitical flare-up that impacts the macro, meaning the Fed policy, meaning the inflation picture, that's what the market really cares about. The market doesn't care what Israel is going to do, what Iran is going to do. The market cares about what's going to be the impact on the global inflation picture, or what's going to happen to the Fed's policies, and of course, deficits. That's becoming more important now. So there is an impact. I wouldn't dismiss that. GDX at the highs of the day, VIX at 19. Thoughts to this? GDX will continue to appreciate. Like I said, it's probably going to hit the 60. Not next week. You probably want to bet July for that, 55.60. And we'll keep the 50.55. If anything, if we trade all the way fast above 55 next week, That's going to be exercised, and we capture the full $5. So we'll keep GDX. Now, as far as the VIX, I think the VIX is going to come back again. By the end of the session, you'll see more hedging, because nobody's going to go into the weekend without a hedge, knowing that there is retaliation coming. Market makers playing the biggest psychological game ever today. I think they flush SPY Monday 2%. Could be, especially if there's a flare up and if crude trades above 75, specifically 75, that's the threshold. Under 75, it still can be handled by the economy, but above 75, that's problematic. That begins to increase the inflation picture. That begins to increase the price at the pump, and the consumer is already squeezed. So above 75 is going to be really problematic. Right now, the market is going to look at crude oil and say, okay, 72-ish. We'll see what happens. But if we have another flare-up, 75, market is going to flush down right away. Apple 195, 185 for July 3rd. Worth to play in this situation as options, not much expensive. 195, 185 for Apple, yeah. And again, the implied volatility for Apple is not that big, so July 3rd, 195, 185 is reasonable. You can do 195, 190 because you have about 2-3 weeks to the expiration, so you can do 195, 190 and assume a little bit less risk in that trade. And you still have a really good profit, so let's look at the trades here. Apple, look at the third and go with the 195. And if you sell the 185, you're spending 241 to make 33. If you sell the 190, you're spending 150 to make 350, which is pretty decent. And this one will give you a better hedge if you feel that Apple is going to move up, not down. You can exit, and you haven't invested a lot here. So I think this is a better trade than the 195, 185. If you're going to do 195, 185, you probably want to go longer expiration date. Then it's worth it because you're keeping a chance of profit above 35%. Zero DTE on the SPY 600, good. I'm assuming you're looking at the puts. Yeah, I mean, you can speculate on that because I think we'll see a pullback at the end of the day as hedging shows up. So I'll probably do that too. I'll probably do the 600 puts, zero DTE, just a speculative play. Let's look at Adobe. I want to look at Adobe because yesterday we didn't talk about Adobe. ADBE was a negative reaction, but I think that they might have bought it. Yes, see a negative reaction. Adobe, everything is slow today, folks, for some reason. Adobe's down about 5%, so let's look at the daily chart. Yeah, that to me looks like it's going to roll over. So close below 386.75, that's the number that I got. It's probably going to roll over. And Adobe doesn't have a lot of cushion, by the way, against the recession. Netflix does. Netflix does because you have your subscription and you're staying at home, you're unemployed, you probably want to watch some stuff. Adobe, that's going to cost you, what, 60, 70 bucks a pop at the lowest tier? If you're not working, you don't need that. So Adobe's a little bit more sensitive to the cyclicality of the economy. I was actually thinking about shorting Adobe. Have a short on it. Let's see how it's going to close today and then make a decision. SPY, let's go back to the 5 minutes. It continues to move higher here, folks. So let's see if we're getting more volume in the call side. Not a lot. Mostly closing, by the way. Mostly it is closing. So that looks to me that the market maker is trying to play that game off. See, they reduced a lot of the value of the puts, right? It was in the 90s, and now it's going down. So I think what they're doing is trying to push the tape a little bit higher here. With no risk, because this is a risk, right? If you go above 602, that's a risk for the market maker, but it's easier to push it down below 601, assume no responsibility here, push it even below 600, and have no responsibility at all, and then you've already hedged against the puts by selling at a higher price. I think that's what the market maker is trying to do here. So my 2 cents, probably in about an hour or so, we're going to begin to revisit that 600 line and break below. And we're probably going to settle, if I have to guess here in the SPY, we're probably going to settle the safest zone you can settle in is about 599 or 598. Because if you go down here, you have big numbers of volume showing up. So 599, 598, now 598, 599. The calls, no major open interest, and the volume is already covered for. So I think 599, 598 will be an ideal close for the market maker. So watch out for that turnaround as we begin to open the second half of the day. But folks, interesting day and interesting time ahead. We'll be back again on Discord in the chat session. So folks, if you joined us recently, I know a lot of you are new. If you joined us recently, you can type your questions in any platform you want. I catch all of them, so we're going to check on Patreon, see if we have somebody there. But we also have the live market trading channel in Discord. Firecat is in Patreon, but nobody else. But we have the live chat channel in Discord. Join us there in about half an hour. We'll be chatting with you again, and maybe the picture will change. Maybe we'll see what I've been talking about here. And I'm watching the news too. So if there's a retaliation happening right away, more bombing happening right away, you see more and more of that flare up. But my 2 cents, to be honest with you, between the performance of crude oil and gold, which one is the most reliable right now? I mean, let's plug in LMT too. Let's do Lockheed Martin. In the 5 minutes. Lockheed, maybe it is right now a reliable one, but I think that you're better off going with gold. If you're betting on a geopolitical flare-up, you're better off going with gold miners, because they're a hybrid play. Good for geopolitical flare-up, good for other circumstances too. This one, you're only depending on the geopolitical flare-up. This one, same thing. So to me, gold is the most solid play right now in the market. Okay, we're pulling back a little bit, so I think, again, we have a revisit 600. So with Neil, I'd go with the 600 puts, 0 DTEs, see how that's going to work out by the end of the day. Again, it's a long shot. We got one more question. Dixie lost a lot of its gains today, but having a little bit of a bounce now. You said the action in the Dixie is very important today. Yes, because if the Dixie is sold, then the market is betting on, you know what, this is going to require U.S. involvement. And that's going to require more of the sell America trade, more expansion of the deficit. So that's why it is scary to me that in a day like today, we're not using the dollar as a hedge, and we're not even using the TLT or U.S. bonds as a hedge. That should be concerning to a lot of investors. Why isn't that working out anymore? And I think there is an answer to that, which is the market expecting that we're going to continue to add to that deficit. So with the dollar down, again, gold, the case for gold is just so strong right now. It is the most obvious bet on the planet. With the dollar going down and all what's going on, gold is the easiest bet. Anyways, we'll be back again, folks, in about half an hour. Live market chat and Discord, we'll see you there. Good luck with the rest of the session, and for those of you leaving already, have a great weekend. We'll talk soon. Take care.